Hello everyone, welcome to my channel. This is Easy Accounting channel. Today we are studying IFRS 15, Revenue from Contract with Customers. Objective. The objective of IFRS 15 is to establish the principle that an entity shall apply to report useful information to users of financial statements about the nature, the amount, the time, and uncertainty of revenue and cash flow arising from a contract with a customer. Earlier application is permitted, however, mandatory annual reporting starting from January 1st, 2018 is accepted. Scope. IFRS 15. Revenue from contracts with customers applies to all contracts with customer except IAS 17 leases, IAS 27 separate financial statements, IAS 28 investment in associates and joint, IFRS 11 joint arrangements, IFRS 10 consolidated financial statement. So it applies to all contracts except those one I mentioned. Accounting requirement for revenue. The core principle for IFRS 15 is that an entity will recognize revenue to depict the transfer of promised goods or services to customer in an amount that reflects the consideration to which the entity expects to be entitled. So there are 5 core steps, framework that we have to know. Number 1, identify the contract with your customer. Number 2, identify the performance obligation in the contract. Number 3, determine the transaction price. Number 4, allocate the transaction price to the performance obligation. And number 5, recognize when the entity performed the obligation. Let's talk about contract cost. The incremental cost of obtaining a contract must be recognized as an asset if the entity expects to recover those costs. However, those incremental costs are limited to the cost that the entity will not have incurred if the contract had not been successful. So the costs incurred to fulfill a contract are recognized based on one of these criteria. Number 1, the costs that are expected to be recovered, the cost related to a contract, and number 3, the cost generates or enhance resources of the entity that will be used in satisfying performance obligation. So let's talk about further implementation of IFRS 15. Performance obligations satisfied over time, warranty licensing, repurchasing agreements, consignment arrangements, bill and hold arrangements, method for measuring progress toward complete satisfaction of a performance obligation, sale with a right of return, then principal versus agent consideration, then customer option for additional goods or services, then customer unexercised right or non-refundable upfront fee, and disclosure of disaggregation of revenue. Let's talk about the financial presentation of IFRS 15. Contracts with customers will be presented in an entity financial position as a contract liability, contract asset, or receivable, depending on the relationship between the entity, performance, and the customers. So let's explain about contract liability. A contract liability is presented in the statement of financial position where a customer has paid an amount of considerable prior to the entity performing by transferring the related goods or service to customer. So where the entity has performed by transferring goods or service to customer, the customer has not yet paid the related contracts or receivable is presented in the financial statement position depending on the nature of the entity right to consideration. Let's talk about a contract asset. A contract asset is recognized when the entity right to consideration is conditional on something other than the passage of time. So contract assets and receivables shall be accounted for in accordance with Ifrs 9. Impairments relating to the contract with customer shall be measured, presented, and disclosed in the financial statement. So let's talk about disclosure of Ifrs 15. The disclosure objective is for an entity to disclose sufficient information to enable users of financial statements to understand the nature, the amount, the time, and uncertainty of the revenue and cash flow arising from the contract. Therefore, an entity has to disclose the qualitative information and quantitative information about the contracts with customers, the significant judgments and changes in judgments made in applying the guidance to those contracts, any asset recognized from the cost to obtain or fulfill a contract. Entity will need to consider the level of detail necessary to satisfy the disclosed objective and how much emphasis to place on each of these requirements. Thank you for coming to my channel. Please subscribe to my video and I will see you in my next video. Subscribe to my channel, please. Thank you. Bye.